All right, what's up, traders? Welcome back to the channel. We're going to discuss what's going on with Bitcoin, what happened this week, what I'm expecting next week. So make sure you stay tuned until the end. So here we go. We're still in a 12-week range. That is it. That is where we are. That is what we're doing. Bitcoin is range bound. Now, one could make the argument that it might not be so good that Bitcoin is range bound, especially after breaking out of all-time highs here and getting going. You really only got 1 month going there before you fell into a range. And as long as you're, above your yearly opening range on Bitcoin, there is a potential for it to go higher. There isn't really anything in the macro that suggests that Bitcoin has topped out, but if you want to say that it has topped out, you can go ahead and do that. But we just made a fresh all-time high last month, and this month, which we just started at the beginning of this week, you made your fresh monthly open, you went down, you set a potential monthly low, and you went all the way back up to the monthly open. That doesn't seem very bearish to me. It seems very choppy and range bound to me, more than it seems like it's trending. Okay, so as of right now, the trend is up. This is a lower low, but as soon as you made the lower low, you went up and made a higher high. That's usually more of a bullish signal rather than a bearish signal. It doesn't always mean that it's bullish. Obviously, this could have been a liquidation run and you're seeing that go, but I can tell you one thing, the price action that I've seen this month only, just this past 7 days, because today's the 7th, has not been super bearish. At best, you can say it was a pullback because you did not take out the low. So that means this month's range is still the main driver of price right now on a technical basis. On a technical basis on your 21 weekly, you're still super bullish, still primed, ready to go. However, you've lost bullish momentum. You're no longer overbought on the weekly. If you're going to continue to be bullish, that is what you want to see. You want to see the oscillator cool off. I would argue it'd be better to see it cool off back down to the 50 as it gives you another potential 6 months to run back to overbought territory, right? It's a lot harder to maintain bullish momentum for a long period of time because you run out of that high buy demand that spurs all-time high after all-time high. You've lost that kind of demand that is needed and required to make price continue to blast off to the upside. You don't have that right now. Right now, there is a lot of supply coming in at these higher prices. Here on the daily time frame, this is what we currently have. Price has been range bound. We set an all-time high in January, and then it cooled off, setting your high day close. Your high week close was set all the way back here, and your high month close also set last month. So here you are, right? You roll over, you set a lower high here with this lower low intact. Obviously, the sellers jumped on it, pushed it down. Hopefully, the sellers took profits because boom, big rip your face off rally. You know how many people that literally stopped out? So many people got wrecked in that move trying to short near-term rejections. As long as you're below this, any pullback to that point could be a potential short side entry if you want to follow the trend, but you're not in a trend. You're not in a monthly trend. At best, you can say you're in a weekly trend, a 3-week trend, because when you made the all-time high, you took out that week's low with a fresh low, and this week you took that low out with another fresh low. So at best, you can say you're in a 3-week downtrend. I did go into this morning with a long. I took the profits right up in here because we knew that the November 2024 high was going to potentially act as resistance, and the midpoint of last month's range could potentially act as resistance because this is where you need to get above to prove that demand is back into the market. As of right now, you have a sell signal on the daily 21 exponential moving average, but your moving average on the daily is not going to get you those optimal entries because you are in a 12-week range. People are trying to gauge they're biased on this, and they're forgetting the main fact that the 21 exponential moving average is a trending indicator. It is only useful during a trending environment. At best, your 3-week downtrend here is a potential sell signal now that it's rolling back over again, and now that you're under last month's midpoint. You got your highs, your open, your lows, your closes, your midpoint. That's the 5 data points you get from a candle. Those 5 data points are enough to help you determine what is going on. You are in a bullish trend right now on a monthly time frame, on a quarterly time frame, you are in a bullish trend. You have not taken out Q4's low. Now, am I going to let price get all the way down here before I get bearish? Obviously no, but I can analyze near-term price on a near-term basis. If anything, you made a all-time high right after you made a fresh low. So if you were going to trend from here, we would have wanted to see no more closes above this point here. But you got one, and then you made all-time high, closed higher. That is not bearish. That is the very opposite of bearish. This month, however, you opened 7 days ago. So the last 7 days have been volatile. You traded all the way back down under the yearly opening range, but you did not take out January's low. You made a higher low here. And as long as this higher low is intact, you have to give respect to the upside. Now, with that being said, since you've been in a 12-week range, you're going to get chopped up if you don't know what you're doing. Now, on the very, very near term, on the daily, you have a sell signal, and you do have, here's a high, there's a low, there's a lower high, there's a lower low. So on the very near term, on the very 3-week condition, you do have a downtrend. So I am holding a short position at 99,284. I closed a long position this morning. I was long going into today. I assumed we were going to run the previous 2-day highs. As you can see how that midpoint came in here and acted as resistance yesterday and Wednesday. There is Wednesday's high. Here is Thursday's high. We made a fresh low right here, but then could not go lower than the 618. The 618 is also a potential buy zone. The 50% retracement lets you know you're under the midpoint. So the near term respect has to be given to the bears. That is why my near term entry short is right here. All right. But if we get down to an area of potential support and that support holds, I will close that short and flip back long. That's how I do it. That's how I roll. But anyways, moving on. As of right now, yeah, Bitcoin's been weak the last couple of days while the overall risk markets were bullish. I don't like that. I generally want to see Bitcoin be stronger than the risk markets generally. But, you know, there's a lot of news going on. You had Trump tariffs starting off the week. Right here was how the week started. The week started with Bitcoin literally hitting lows down to $91,000. And then you got a rip your face off rally that shocked all bears. All bears were shocked during that time. That's a $12,000 move. Boom. Probably more than that. Huge move, guys. Huge move. And then you've done nothing since. You're trading inside of that day's range. Here's that day. Right here. Look at that. You haven't taken out its high. You haven't taken out its low. You are in a range. You are in a longer term range. A range inside of a range inside of a range is what you are. But in my opinion, moving forward, I think this point will be extra, extra heavy. I'm not meaning that I think price is going to move down from here. I'm just saying as long as price is under this and as long as I have a daily sell signal with the 21 and the 50 on the RSI, then yeah, I can look for short scalps, all right? But if we're above that, not so much, because we just made a fresh all-time high last month. All right, let's go look at some other markets real fast. Let's first go look at the bond market. So right now you can see what's currently going on. Let me flip this to a daily time frame real fast. Get this situated here. So this is the 2-year bond and it has been struggling. It has been struggling to get bullish. And my longer term thesis, my more macro, broader outlook on the marketplace is this. As long as this is bearish, as long as this is unable to make bullish moves higher, then the yield is going to go up. Now, on the yield, since we have a low here, a higher high and a higher low, there is no worry or no concern. Not as of yet. If we start making lower highs and lower lows, then we will be a little bit more concerned because that's going to cause the Fed to potentially be concerned. And if the Fed gets concerned, that's going to cause overall concern in the risk markets. Bitcoin is the riskiest risk-on asset of them all. So obviously, if this is going to be concerning for the Fed, it's going to cause a lot of concern in the overall marketplace. If the 2-year becomes bullish, then the risk market will probably be bullish. But as long as this concern is in the market, then we have to worry. Now, here's today. You're under 1,000 on the ADD line. This is your advanced decline line. This is just letting you know that the overall market is bearish. We go look at the watch right here. I have the S&P 100 pulled up. This is the 100 biggest companies in the S&P. You can look at the S&P 500 if you want, but you're going to get the same data. You're going to be 73% bearish and 30% bullish. But you can see today it's a little bit weak, right? Across the board. Your tech, Apple, weak. Amazon, weak. Right here is Amazon. All tech is weak. All tech is weak. Basically, the entire market's weak. If you go look at the index watch heat map here, you can see tech very, very weak and not really much strength anywhere in the S&P 500. We go look at the Russell 2000. It'll give you a broader outlook on the entire market as a whole because it has 2,000 stocks in it. So this gives you a broader market outlook. As you can see, it looks more bearish today than anything. All right. But going back to the charts, you can clearly see that you're bullish on the month. Here is the fresh month VWAP. I know it's hard to see because this is last month's close right here. And this is your fresh month open. You can see that in the date at the bottom, 131 there, 23 here. So this is February's opening price. On the month, you're bullish. This is where you open. This is where you are. You're bullish. Your monthly VWAP is bullish. This is the volume weighted average price on a monthly time frame, but calculated on the daily. I know it's confusing, but in my opinion, as long as price is staying above the dots, the purple dots here, that's your VWAP, then price is more bullish than bearish. Even though we're having a negative day today, based on the bonds, today we had NFP, right? It came out, seems like the Fed's going to have to pause a little bit longer. It's causing the near-term bearishness. Once this gets to moving back in the up direction, then the Fed will start cutting again. You know this. I know this. Everybody knows this. This is what we know. That's why we know it, is it's important. But we don't have to speculate. We know. If the bonds keep selling off, the market's probably going to sell off because the Fed might have to hike again. And that's what the market don't like. So once this starts to move higher, the Fed will be able to start cutting again. And until that happens, the market could be a little bit weak, or at least very volatile on the near term. A lot of good scalps today to the downside. A lot of good trades today. Bitcoin made a fantastic trade to the upside. Fantastic day. So yeah, a little bit of weakness here, but nothing major. Nothing major. All right, back over to these charts. Let me see here. So yeah, I mean, what else are we going to talk about? So that's the bond market. Let's go look at some FX pairs. And the reason that I want to look at some FX pairs is because I want to talk about them. There could be an argument to make right now that as long as there is uncertainty in the marketplace, since the Fed has cut interest rates and since the Japanese yen has raised interest rates, there could potentially be an argument to be made that the yen risk-off scenario could be back. The Japanese yen, before the big massive carry trade on the USD JPY, before that took place, the yen used to be looked at as a risk-off currency. So whenever there was a lot of uncertainty in the marketplace, people would buy the yen. And then when we raised interest rates on the dollar so fast to combat inflation, that ended up making a very wide berth between interest rates on the Japanese yen versus the USD. We got all the way up to like 455 point range on the USD, and the yen was still negative 0.1. So there was a huge carry trade there. So people got long the dollar and short the yen based on the carry. Now that carry is pretty much done. It hasn't unwinded yet, and there still is a discrepancy between interest rates. So people could potentially still be looking to short the yen based on that. But if they don't, the argument could be made that we could potentially see the yen get strong based on risk off in the marketplace. So as you can see, I have a short position. Well, you can't see it because I'm not loaded into my broker, sorry. But right here on this blue line, I took a short position on Aussie yen. Obviously, I took profits on that trade yesterday, and my stop is setting to break even, and I'm going to see if this wants to continue lower. All right, here is Euro USD. So if the bond bulls are able to support the bond, the 2-year bond, the one that we were just looking at, if the bulls can support that, then obviously I expect the euro to go higher. because that in turn will cause the dollar to go down because the Fed can continue to cut rates. And the more the Fed cuts, the less that USD JPY carry trade looks attractive. The yield curve inversion between the USD versus the Japanese yen will get closer and closer to being uninverted, therefore no carry trade, therefore unwind on the carry trade. If that occurs, we could see euro pop and the dollar drop. That is why I have a long position on the euro, sit it at 1.02601. However, I took profits on this day right here. Now, this is clearly weak, long term, near term, forever term. This is weak. It is bearish. All right. This was Q4 of 2024. We shorted up here, right there. Boom. We made this all the way down. We just closed that trade out the other day and put on the long trade. You have a higher low here. From this low to this low, that is a higher low. You are currently retesting the 2025 yearly opening range. So if the bonds bulls can maintain bullish bond, I do believe that this will go up. Obviously, if we continue to see negative bonds or bearish bonds, that would be positive yields, then the bonds are going to roll over. This is probably going to roll over and stop me out. Hence the reason I already took profits, because it is a downtrend. Whenever you're taking opposite or contrarian trades on a trending market, you have to be very, very quick to take profits. The reason being very simple. You are trying to take the contrarian side of the trade. That way you had to be quicker to take profits. Now, if we were in a long-term uptrend here on the euro and I would have got long here for bullish continuation, then I would not have taken profits yet, right? Because there's a potential to be in a long-term trade with max size position. No, when you take contrarian trades, when you're trying to buy lows and you're trying to sell tops, you need to be quick to scalp those profits out. Now, if it does end up holding support and it does roll over, then this now what is a smaller position size will end up growing as time progresses. But here on the near term, it's starting to look a little bit worse for me on that front. But let's go talk about the USD JPY, as this near-term downtrend is very, 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 very good. And the reason I am short this is simple. I got short on this day right here, right at the open, short the open. Here we are now. That trade looks fantastic. This is also a near-term contrarian trade, because if you look at USD JPY, say on a quarterly chart, this is clearly bullish, right? It is clearly bullish. You're in a 1, 2, 3, 4 year uptrend. You just started year 5, you're 2 months in, you're actually 1 month and 7 days into 2025. It is too early to tell if this is a reversal or not. But everything I said a little bit earlier as far as the interest rate differentials, if the Fed is able to cut, continuously cut, this trade will probably unwind. It took 4 years to get up there. It could take 2 years to get back down. I don't know that it's going to go down, but this is where I like my chances, because if the yen does get strong based solely on the fact that there is potential for it to be a risk off currency, then I want to be short the USD JPY. And if there's a potential for Fed to cut interest rates, then I want to be short the USD JPY. Now, if the Fed has to hike interest rates, that could obviously keep a carry trade biased under this, as you are structurally bullish. But we're all the way up at 151, and I can remember trying to buy USD JPY at 104. 151, 104. Huge move up that was in the last 4 years on USD JPY, based on a restrictive monetary policy and a differential between the interest rate. So if that is going to unwind, I want to be short this. Is there continuing to be potential short possibilities on this? Yeah. On the near term, you're starting to unwind. This trend is pretty clean. We had 2 days here. I was short up in here and I got stopped out. We had a big spike up on the dollar this week. Huge spike on the dollar. That ended up causing me to get stopped out, but I ended up taking the short on the next day when I seen that we made a lower high on the daily and we closed back under resistance here. We're still under the yearly opening range. Yeah, we're making fresh monthly lows, right? Fresh yearly lows, fresh monthly lows right now. So I don't need to close this position. I have already taken profits on it because there is a lot of uncertainty out there, but I am positioned very, very good in the Forex markets and on Bitcoin, and will be in the risk markets again for any bullish continuation in the risk markets. I'm sorry, it's going to be a long video, but I need you to understand where my bias is coming from. This way, people will just start to watch the videos and look for trade opportunities or potential longer term trade opportunities and stop being worried about the near term day trade opportunities. If you want to be a near term day trade opportunity, in the description, go to the Patreon, get in a hedge fund tier, and you can drop in the Discord where I give trade ideas on a daily basis. All right, that's for day trade scalps. If you don't want to do that, that's fine. I will keep you on the right side of the market. But with everything we went over today, there is no reason to get carried away to start looking for bearish markets just yet. Risk markets, Bitcoin top, an S&P top. No reason for that. Now, since tech got destroyed based on that news that came out about DeepSeek, that did obviously have a negative effect on Apple. But I would simply say that this was a short opportunity, because anytime you're under the yearly opening range, any retest back into it could potentially be a short, just based on that fact alone. But the DeepSeek news is what caused such a massive reaction. And here you are, it looks like it's trying to make a fresh low. Obviously, this will have negative implications on the S&P and on the NASDAQ, because Apple is a $3 trillion company. Same with Nvidia, boom, boom. Same with Microsoft. All of them. Massive, massive evaluations. They will affect the overall markets. So they're all down right now, right? But at any point, that DeepSeek news could come out that it was a sham, fake. They lied about how much it costed. They lied about how they built it. Who knows? It might end up being one of the best things ever. Only time will tell. But as long as there is pressure on tech, then obviously you have to be a little bit optimistic at best, or you can just simply say cautiously bullish. As long as you're here and under, you can be bearish. I don't care. It doesn't bother me at all what you decide to do. I'm bearish right now. Right now, today, just today, I have a bearish position on Bitcoin. So if it drops off the face of the planet, I have not taken profits on that trade. I am in that trade with 10x leverage. I will hold that trade forever, because I had such a great bullish trade today. I don't think Bitcoin's going to zero. Obviously, I am longer term bullish on Bitcoin, longer term bullish on everything, because the Fed is pausing right now. The Fed is simply just pausing. They're going to wait to see if this near-term spike on the yields can be reset, going back in the direction that they want them to go. If that is the case, then the Fed will be right. Ultimately, in the long term, the Fed will be right. Again, they have been right all along. If you haven't noticed now, the markets tend to do what the Fed says, right? You got this push and pull between investors. Right now, there's a little bit of cautiousness out there. There's a little bit of concern, but it's Friday and you're still bullish on the week on Bitcoin. That weekly open is holding as near-term support right now. Right now, you have been trying to break the weekly open for 3 hours. We're currently breaking it now. If it wants to go lower, I'll let it go lower. I will let it go lower as low as it wants to go. That $300 position is now worth $400. So let it go. Let it go, let it go, let it go. I don't care. That's why I said what I said over here, guys. It's in a range. Last month made higher highs. February is not made lower low. Facts state Bitcoin's in a 12-week range. Currently price is being held down by last month's midpoint. A liquidation and failure there would be concerning for long-only people, not me. I am not a long-only person. I am a trader. I don't care about Bitcoin. I love trading Bitcoin because it offers volatility, huge moves. That's why I love it. However, Bitcoin as an idea, Bitcoin as an inflation hedge, or Bitcoin as a world reserve currency, I don't buy into any of that. None of it. I just don't. Quantum computing is right around the corner. But as of right now, I love Bitcoin because of its volatility. I hold Bitcoin because why not? It only goes up on the long-term time frame. If you look at this chart, it goes up with brief bouts of volatility that last anywhere from a year to 2 years. And then boom, right back up. Now, to be fair, it's only a 12-year-old asset. Well, older than that now. It's a newer asset class But as of right now, it only goes up. Will that be the same as we move further on and the ETFs, more and more people start investing in Bitcoin? Yeah, I believe it will. As long as there's no massive threat to Bitcoin, I don't see why Bitcoin can't continue to do the thing that it's been doing for its entire life. But as of on the near term, obviously, I can scalp the volatility. I love to scalp the volatility. It's absolutely fabulous. So hopefully you get an idea of my long-term outlook, but also understand that I am an intraday trader as well, as to not confuse anybody. No, I have not sold any of my HODL bag, but can you afford to lose your HODL bag? I can afford to lose mine. That's a question you have to ask yourself. If you cannot afford to lose your HODL bag, then maybe you should make that position much, much smaller. You're literally betting all of your eggs in one basket if you have all of your money tied up in Bitcoin and you need it to go higher. That is no place to be, my friend. You can get rich by becoming a profitable trader over time. Risk management. I can make money whether Bitcoin goes up or down, and so can you. You don't need to be a perma bull or a perma bear. You can be a perma trader and be like me. Don't care which direction Bitcoin goes. But I have not missed the top. I promise you that. In fact, this pullback is so small in the grand scheme of things. I missed out on a 10% move, and I didn't miss out on that. A 10% down move ain't anything. I made a 100% return on my portfolio account this morning. 100%. Why am I worried about a 10% drop? I'm not. The only people that are worried about missing this swing high to where we are right now are people that are ignorant to the way this game is played. Right now, the Fed is on the side of lower interest rates, but slowly over time. All right, enough of the rant. Y'all have a fantastic rest of your day. Make sure you guys trade safe, trade smart, and as always, happy trading, everybody.